Hi everyone, in this video I will show you a couple of tweaks that I made in my medium time frame and low time frame counts, as well as providing you with a little bit more insight in certain counts. So over here you have now what I like to call my alternative medium time frame count, which is a WXY. Now the Y then would be an A, and then we would expect some sort of a B to the upside. However, if this is already a three-wave structure and this would then be an A for then a B and a C, this three-wave structure is very, very shallow. It's, in my opinion, not high enough to eventually get to wave B all the way up there at about 26K. So at the moment, this is the reason that this scenario for now is my alternative scenario, while this scenario over here, the WXYXZ, is my preferred scenario. Also, and I noted it on my chart regarding the volume, just so I remember. Because if we look at the volume, and the volume is not that clear actually on my chart due to the colors I use, but I hope you can see it like this. There is a trend going on in the volume, and usually what you see during corrections, especially a WXYXZ, is that the volume is getting lower and lower and lower. And what you can see, except for the spike over here, almost at the low of Y, a little bit of a weird maybe bug, big wick over here. But what you can see is that in general, the volume has been going down as time went on throughout the range. Throughout the range that we're in. So throughout the WXYXZ, the volume is slowly and consistently going to the downside. And that is something that is very reminiscent for corrections. And that's also why this is another reason this is my preferred scenario. Besides the fact this wave X hit the target, the minimum target of the 0.5 Fibonacci taken from the X over here to the low of Y down there. And lastly, another reason this might be my preferred scenario is that the target box that I show on my chart right now, it's between 21,950 and basically 21,750. So this area over here also happens to be in between the target area trend-based fib extensions of a potential wave Z, because you take the high of 3 in this case to the low of W and then put it on the X over there with the trend-based fib extension tool at the top, put on the 1, toggle on the 1.236, and you see that the area, the target for wave Z, is exactly at this target box. And that is actually something I really, really like. And to zoom in just a little bit more at what is inside this target box, we have a time naked point of control. Over here we have a weekly and a daily at exactly the same level. If you want to know more about weeklies and dailies, click on the card at the right top of your screen. And we also have a daily naked point of control at 21,750. And if you want to know how to trade those, make sure to click on the next card appearing on your screen right now. So this is at the moment my preferred scenario, and for a bigger wave 4 it's also valid, because wave 4 would then end in between the 236 and the 382. Most commonly a wave 4 goes to the 382 or between the 382 and the 05. However, the 236 and everything in between is a very valid target. Now the bearish scenario, this one, nothing really changed compared to my previous video. So very shortly, this is a 1-2-1-2 setup, which would then expect an impulsive move to the downside. For me, this is currently not a preferred scenario, especially because of the very long triangle here in comparison with a very, very minimal wave 2. So it's very odd to count this as a 1, 2, 3, 4 and a 5. But it's just a scenario on my chart just in case. Another temporary, more bearish scenario before eventually more upside for wave 5 is that this move here, the WXY, is part of a bigger W, which then would lead to some sort of an ABC. And I gotta say that if this is an ABC, so a 3, 3, 5, in this case, wave B has to retrace at least 90% of this move, so to at least the 0.9 Fibonacci, one can say. However, most commonly in a flat, most common flat is the expanded flat. So then we would basically expect wave B to take the lows over here before a wave another impulsive move up for C. That would then be the green X, so that we have a W, X, and then eventually move down for Y to finish wave 4, and then move to the upside to eventually finish wave 5. The final medium time frame scenario that I have is this one over here. And with this one, we have the WXY again in the W, but in this case, the green wave X is already finished right exactly at the 38.2 fib time, which is taken from the high of 3 to the low of W, and then you double click over here, and then you get the fib time, toggle on the 382. Pretty perfect. It's quite short, but however, it still works. The invalidation, of course, is then taking the high, but in this case, we would expect a move to the downside for a potential green Y, which then usually is time-wise quite the same as wave W. And if we toggle on quickly the fib time and we go to the beginning of wave 3 to the end of W to then the end of X over here, and we toggle on the 1-to-1, then we can see that the expectation for wave Y in this case would be to end around the 10th of March in a 3-wave structure. So that is something like a date we can at least keep in mind. Now on the lower time frame, I do have some ideas, even though we don't have too much price action. Price has basically again been ranging for a while, so it's actually relatively boring. However, I do have some extra things on my chart, as you can see, compared to the previous video of this morning. Now, first of all, the bigger picture before I zoom into the very local price action is that if this is indeed a WXYXZ on the medium time frame, and then this is X, so a WXY in this blue X, we would then expect to move to the downside for this wave Z, which then is very attractive to reach this target area, right? So in this case, we're looking for a 3-wave move down, and so far it looks very 3-wavy. Let's say it doesn't look impulsive at all. This looks like a 3-wave. One could count this move over here as a 3-wave. However, we currently find some support at the 886. I think it's important to tell for the people that are interested that the 886 is a Fibonacci target that can be used for a wave B, but is not used for a wave 2, for example. It's very, very deep for a wave 2. It's very uncommon for a wave 2 as well, very rare. But for a wave B, it can work, but usually what you want to see is that it tags the 886 and then quite soon, a few candles after, continues further up to the upside. In this case, we have been ranging above the 886, and in general, that's not a very good sign. However, the scenario that this could somehow be a 3-wave structure is still something that I have in mind, and the 1-to-1 level of this structure, so from this A to then a B and a C, is at the 23.8k level, as well as like the 786. I do like to say though that on the CVD over here, we do see bearish divergences. So over here, you can see we make lower lows, but you can see that, well, on the lines, let me zoom in a little bit. So we are making lower lows, while compared, if you look at the yellow line, we make higher highs on the CVD. With at least the Bybit CVD that I have on my chart over here. The blue one is basically going along with price action, not too interesting, but the Bybit one shows bearish CVD, which of course doesn't look that great for eventually more upside. The invalidation is over here at basically 24k. So this is for me an interesting scenario where I would be looking for eventually more downside, and ranging so long at the 886 makes it more likely. However, I still have the scenario that this can be some sort of an ABC and then end at the 1-to-1 and then eventually move to the downside. The second scenario on the lower time frame is that we are in a bigger ABC. So then eventually this is A, the green A, then we have the green B and the green C. The low was made at the weekend, and a low made at the weekend with retail traders entering their longs and being in profit is not something the markets like. So I can imagine we are eventually going to take these lows, and with this scenario that would be brilliant, as well as with the WXY and then XZ, we also take these lows over here. In this case, I'm looking for an expanded flat. So we have a 3-wave, then a 3-wave, and then a 5-wave move up. And wave B, the only problem I have with the target area for wave B, which is in between the 1.236, the yellow line over here, Fibonacci, and the 1.38 Fibonacci, taken from the low over here to the high of A. The only problem I have is that I don't have any other confluences at this particular level. As you can see, my target box is quite far below this area, unless we wick inside and then close inside this area. I can see it as like a legit structure, but I don't really like it. Also, because if we look to the left side, the area for this wave B is over here, basically in a very impulsive, not like there's no structure over here. There's not a range or whatever to maybe hold price up just a little bit more. So that is the reason why I'm not a big fan per se of this scenario. But it is nonetheless a scenario that I like to have on my chart. So hopefully you found this video valuable with some more insights that I had in my previous video and some thoughts that I have with the certain counts to make it a little bit different as well. Let's see how price is going to develop in the upcoming hours, and at 7 p.m. tonight CET you will have another video from me. So thanks guys for watching and supporting the channel. Make sure to like and subscribe if you enjoy the content, and I hope to see you at the next one. Bye bye.